Just confirm, please, if the recording is on. It's all right.
Recording is on.
Yeah. Perfect. Okay. So welcome, everyone. It's Marcel here. Also, John is here. Welcome in this session, the usual Wednesday session. And as I said before I started this recording, I will just tell you the topic once more for everyone who couldn't see this session before and just watching the uploaded recording. So in this session, in the first 20 or 30 minutes, we'll talk about psychology. And you guys will be able to ask questions about psychology. You'll be able to share your experiences about psychology, and you'll be able to share what you're struggling with. And if you have something to struggle, if you are struggling with something, we will try to help. We will try to find a solution for your problem. We will try to find a good method for your problem. And that will be helpful for others too, to actually hear what you're dealing with, because mainly almost everyone who's dealing with psychological problems dealing with the same. So hearing another psychological problem could help you to fix yours. So yeah, waiting one more minute before you think about your questions, and after we will start this psychological session. And after the 30 or 20 minutes, we will create the usual top-down breakdown. You know, we will start with the 4 hour, we will create a forecast for the 4 hour chart. After we will create a 15-minute forecast, we will create a 5-minute and 1-minute forecast too. And we will consider every single possible scenario that will happen on this week, that will happen in the upcoming days. So yeah, but right now I'm hiding the video panel, not this one, video panel. Yeah, okay. So I will start with a clean chart right here, for example, or above this one here with a clean chart. On the 4 hour, it will be a much bigger space. Hi, video panel. Okay, guys. So let's start a psychological thing. Who'd like to start? Who'd like to share their experiences with us first? Please don't be afraid. Don't be ashamed of your problems. Don't be ashamed of your psychological troubles. Just start it, please. If you got any questions, or not just about sharing experiences, just simply start with a question about psychology. Here's the first one, and I won't name the person. So, okay, you can actually share your experiences anonymous. Okay, so just please send me a direct message. You can send a direct message here on Zoom too. You can send me a direct message on Discord too, and just share your experiences, because it will be anonymous. If you don't like to be your name shared, then it won't be shared. It will be an anonymous question. So yeah, here's the first one, and it's about fear of missing out. So it's about FOMO. After opportunity misses, feeling of entering a low probability trades comes in. Okay, so FOMO. This one is a really tough one, right? I just like to know how many of you guys are struggling with FOMO. Let me just create a box right here. This is the yes, I'm struggling with FOMO, and this is the no. Please just draw on my screen. No. Please. Wait a minute before you draw. Wait a minute. Don't exit. Just place sticks like this, so we'll be able to count how many of you guys are struggling with FOMO. So now you can draw on my screen, so please just place your sticks. Okay, just keep them coming. I like to know all of your opinions, guys. Keep them coming. Keep these on the screen. We have to count them. Don't delete your drawings, guys. Keep it there. Keep it there. Why are you deleting your drawings, guys? Okay. So mainly, the majority of you guys are struggling with FOMO, right? More of you guys are struggling with it than not. So this is actually a really tough one. Why? Because FOMO, especially when you're in a challenge. For example, like you're in a challenge, you just started a fresh lab, you just started a fresh phase 1 challenge, for example, with FTMO, and you'd like to make money, right? FOMO basically comes from making money. FOMO basically comes from when you have a burning desire to make money. You'd like to make money right now, tomorrow, on this week, in this month. You'd like to see money from trading. And this is where FOMO comes from. And Yeah, you start a new challenge. You just want to be in a trade, like on every single candle. You see a candle, you see a breakout structure, you see a change of character, and you like to be in a trade because you have a challenge. You'd like to pass the challenge. You like to be funded. You like to make money out of trading because, for example, you're struggling for like this 7 or 6 month, straight in a row or for years, and you didn't even make money. You didn't even make money from Forex, right? And this gives you FOMO because you see that others are already making money. You see that, for example, me or John or other members are already making money out of this game. And you're here, for example, like for the second or the third month, and you're FOMOing because you'd like to make money. You like to see money from this game. What will you do? You will trade unnecessary trades. You will force yourself into bad setups. You will force yourself into literally shitty setups just because you'd like to make money, just because you'd like to see some balance on your account, just because you like to see you passing the challenges, passing the phase ones, phase twos, funding challenges, etc., etc. But this isn't the right mentality. Just think about the code that I told you in the earlier session. In last week's session, I will actually find that code. Here's in the education psychology. Just remember for this: if we only love the fruit, we may not be willing to take care of the tree. But if we love to take care of the tree, we will most definitely reap the fruit, right? Just literally think about this code every time you like to go FOMO, because FOMO trades are coming from you'd like to make money. You'd like to make money, you'd like to see money on your account, and you're forcing yourself into bad setups. But just think about it. If you like the tree, if you like to take care of the tree, if you're taking care of the tree, you'll actually reap the fruit. What is the fruit? It's money. It's money in Forex. What is the tree? It's your actual trading plan. It's your actual trading game, Forex. Forex is the tree. If you're taking care of the tree, if you're taking care of Forex, if you're learning Forex, if you're backtesting, if you're case studying, just practicing. So taking care about the tree, you'll reap the fruit. You'll make money. But if you only think about money, if you only focus on money, if you only focus on the fruit, you will never make money out of this game. And this is basically the base of the FOMO, because FOMO is this one. FOMO is this that I'm just telling you. Just stop it. I know it's not a good advice. I can't really give a good advice for this because it can be given. You have to actually experience the thing. You actually have to change your mind. It's a you versus you battle. It's only you versus you. If you can fix your mentality, and if you actually enjoying the progress, if you start to enjoy the progress, if you start to enjoy trading, if you start to enjoy Forex, just basically sitting in front of your monitor, and you're sitting in front of your monitor every single day, you're thinking like, okay, I love this game. I love doing what I'm doing. I'm just literally obsessed with this game. I will make money. I don't care if it will be next year. I don't care if it will be 5 years, in 5 years, but I will make money. And after this, when you realize that you're loving what you're doing, you will start to make money. You will start to have success in your trading. You will start to pass challenges, create money on your, for example, personal accounts, etc., etc., etc. All you have to do is love the game. You don't want to go FOMO, right? FOMO comes out of actually seeing profits on Instagram, because lots of gurus are sharing profits, lots of other traders are sharing profits, everyone's sharing their profit. All you can see on Instagram is that everyone just making millions of dollars, right? Everyone just making 10K, 100K, $1 million in just one single trade. And you're sitting in front of your monitor and you're thinking about that. I can't even make a winning trade. How am I supposed to make money when I can't even make a winning trade? That's because you're focusing on money. That's because you're focusing on others, and you're only opening positions because others are opening positions. You can't do this. You have to focus on yourself. And if there's a high opportunity, high probability setup in front of you, you will pull the trigger. That's why you have to create a plan. And we will have a webinar about how to create a plan. But first we have to plan this webinar, because it's not just that easy that I will tell you how to create a plan. This will be a whole webinar. This will be a huge webinar. And yeah, we will have this in the future, but that's why you have to create a plan. Because if you have a plan, you won't go FOMO. If you have a plan, you will not FOMO, because you have a plan that you can actually trade, that you are actually trading only when your plan appears on your screen. And you just won't trade when you see an order block that has created a breakout structure without inefficiency. And you won't open a position on that order block because it's not part of your plan. You will only trade when your plan, your edge appears on your screen. And basically, this is the systematic mechanical trading. When there's no room for emotions in this trading plan, in this trading method, there's no room for emotions. Why? Because you have a systematic trading plan that tells you when can you enter and when can you nap. And there's literally no room for emotions because you can't involve emotions in this trading plan because your trading plan doesn't have emotions, right? A mechanical trading plan doesn't have emotions. You have emotions. But if your trading plan tells you when to enter and when to not, your emotions won't be involved. So yeah, that's the moral of the story. Just please ignore others. Ignore others on Instagram. Just actually block every single Instagram account that you're following. Focus on my account. Focus on my Instagram account. Focus on yourself and me and John, and block everyone else. You have to stop giving a shit about others because basically that's giving you FOMO, right? Yeah. So yeah, sorry, this was a long question, and lots of questions have came in. Okay. Okay. Closing the profit faster before TP. Okay, guys. Joseph, it wasn't a direct message. Yeah, it wasn't a direct message, so everyone can see this. Joseph, basically, this is the lack of trading plan too. Why are you closing your profits? Because it's emotional based, right? You're only closing your profits because it's emotional based. You are fearing of taking a loss. But if you have a systematic and mechanical trading plan that tells you when to set break even, when to enter, where's your profit, where's your TP, etc., 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 there's no room for emotions. This is actually coming from, once again, from the lack of the trading plan. You don't have a trading plan that tells you when to enter, when to leave, when to hit break even, when to stop a trade or stop, and you're just closing before it hits TP or hits your trailing stop. That's why we are using trailing stop losses. That's why we are using strict TPs, because that's a mechanical trading. You don't have to involve your emotions, right? Because if you close too early before your TP hits or your trailing stop loss hits or your break even or your stop loss hits, you're just making your decisions based on your emotions. And in this trading plan, there's no room for emotions. You have to backtest your plan and you will gain statistics. You will gain data and basically every single necessary statistics about your trading plan. And you'll see that there's a 70% chance that this trade will hit TP. And the 70% is much bigger than the 30%. And you won't just close your position earlier because there's a 70% of winning that trade and 30% of losing the trade. 70% is bigger than the 30%. We will know that this trade has actually a high chance to hit the TP. So yeah, it's once again the lack of trading plan. You don't have a proper trading plan that tells you when to enter, when to leave, when to trail or stop. Just create a trading plan. And once again, we will create a trading plan planner webinar, but we already have a trading plan planner, but that's not that deep. That's not that in-depth. So we will create a trading plan planner webinar. I mean, where we will tell you how to create a working proper trading plan. Okay, but we have to plan this actually. It will be in like 1 month. So yeah, we have to plan this. We have to create an actual roadmap for the trading plan. We will create a PDF document. We will create maybe a video for this on how to create a plan that actually suits your needs. Okay, but just please stay tuned. Be careful. Be patient. We will create this, but we need time because this is a huge project. It's not just like I'm typing shit on my screen like plan. This is not how it works. We need time to create this trading plan planner. We need time to tell you how to create a trading plan, but we are working on this and we will share you this. Okay. Second question or other question. Okay, this is direct message. Direct message once again. I won't share the name. We have a winning strategy. What are our beliefs around trading and the strategy to execute properly? Let me just read it in quiet. Okay, I believe this question is only for Joan and me, but I won't share the name. We have a winning strategy. What are your beliefs around the trading and this strategy to execute properly? What happened recently to you and your beliefs that broke you to the next level, making 10K in a day and John passing every challenge? Okay, this is actually a really good question. Nothing has happened. Nothing significant happened that has never happened before. Basically, making 10K a day feels the same than like making 100 in a day. I mean, just simple $100. It feels the same. It's about how you execute your plan, how you backtest your plan. I gain more confidence. I gain more confidence in those specific type of trades. And I knew that that trade will run to huge profit because that was the swing high. That was the swing high. I knew that this trade has for like a 90% chance that it will run to my TP and it will hit 1 to 30 risk reward ratio. I knew it because I have statistics about it. I had the statistics that showed that this trade has a 90% chance that it will hit TP. And I just let it run. I have no room for emotions. This trading plan have no room for emotions. This is simply based on pure statistics, right? If the statistics shows that this has a 90% chance that it will run to my TP, then I will let it run. I won't manage it. I don't care what happens. I don't care if it hits break even. I don't care if the 10% happens. I will just let it run. And basically, making 10K a day, making 100K, making 1K a day is the same. It's literally the same. For me, 10K a day will be the same for you, like 100 a day. It could be the same. It's how you live it. It's how you deal with your emotions, and it's how you celebrate yourself. Because for me, 10K in a day was a huge achievement. I've never ever achieved 10K in a day before. And I just felt good. And I knew that, okay, this is my new level up thing. I know my trading plan. I know how it works properly. I can level up my trading. I can boost my account balance up. I will use 6 figures for my trading from next month. And basically, it's how you deal with your own emotions and just combining your emotions with your statistics. And if you know that your statistics and trading plan is working, and if you leave your emotions, you have to leave your emotions too, because if you're winning, you have to cheer yourself. If you're losing, you have to also cheer yourself because you have executed your plan. And that loss is part of the plan too. You have to cheer yourself for the losses too, if you backtest those losses. And not just cheer yourself when you're making a loss. It's bullshit. You don't have to cheer yourself when you're making a loss. You have to cheer yourself when you're backtesting a loss, right? And you actually find the reason that what was the trouble behind the loss. And if you find the trouble, you'll be able to make statistics, and you will be able to cheer yourself that you found that trouble, you found that actual bad thing that has went bad around that trade. It's all about cheering yourself for wins and losses too.
On the other hand, guys, sorry, I'm not just passing challenges, but I tell you the so-called secret, but it's not a secret. Back in the past, when I joined flipping markets, I backtested a lot, I practiced a lot. And that was the reason that I have successfully passed my very first challenge after I joined to the group. And I do the exact same thing every week. I'm still backtesting. If I pass a challenge, I still backtesting. If I get a payout, I'm still backtesting. I don't stop practicing, guys, because it's a never-ending game. You have to practice every week because market moves looks like differently or looks like the same, but
the behavior is changing every single week.
Yeah, everything is changing. Like we said before, the zones are bigger now than before, and that's why we use 2.5 and 3 pip stop loss nowadays and the past weeks, because the zones are bigger. So we have to adapt every changes in the market, guys. But how can you see that exactly when you are practicing and backtesting? And that's the key. And the other one, build a trading plan.
Yeah, basically all of the questions that I'm reading is based on the lack of the trading plan. Once again, here's a question to everyone. It isn't a secret. Felix wrote it, that he's closing his trades too early. The same like Joseph, right? Everyone's closing their trades too early. And I just received the DM on Discord that I won't tell the name because it's anonymous. When I see my edge appears on the chart, I don't execute my edge. Not from promo. It is my opinion. the fear of entering in a trade. It's once again the lack of a trading plan. You don't make statistics. It's not just like make a trading plan. You don't have to just make a trading plan. You have to make a trading plan, but you have to test the trading plan. Without backtesting, you will never be successful in this market. You will never be successful in trading, and you will never make money without backtesting. Because if you're backtesting, you will just open that journal thing. You know, I've already created a journal file for you too. There's an Excel file in the resources channel. And if you actually test your trades right there, you will have statistics. You can use that Excel file for testing flip strategies, testing the flip trades, and you just only make their flip trades. You just only know the flip trades there. And for example, you gain data from 30, 50, 60, 100 flip trades. You will have statistics about the flip trades. And you will see that, okay, all of these flip trades are hitting TP, for example, like 60 or 70% of the time. That will be a good statistics, and you've gathered that data about the flips. You will know that all of your flip entries will be good, and all of these flip entries have 60 or 70% chance to hit your TP. But if you're, for example, you've gathered data from once again 100 flips, 100 flip trades are in the Excel file, and that Excel file will tell you that all of these trades had 20% win rate. You will know that you have to change something. You'll be able to backtest those trades. You'll be able to actually look behind those trades, look behind what was the mistake on those trades, and you will be able to find a common mistake on those trades. For example, okay, so here's the Excel file. You can see my screen, right? Yes, you can. Okay, so here's the Excel file. This is the Excel file. Or I would just share the Excel file, you know, that's easier. Let me just search for the Excel file real quick. Not this one. Not this one. Just a minute. Here it is. Okay. Here it is. I will share my screen on that Excel file. New share. Okay, just a minute, guys. Here it is. So here it is. Here's the Excel file, right? I share this Excel file with you. So for example, you make an Excel file. It isn't sharing.
It isn't sharing.
Sorry. So here's the Excel file. You make an Excel file for just the flips. So this Excel file will be for the flips. You will type here that flip. All of the entries from this Excel file will be flips. You will just note the flips here. So for example, you will have like 100 flips. And all of these are backtesting, case studies, live tradings, etc., etc., etc. Every single flip that you're executing in live trading or backtesting, it will note the flips here. You will send the before link, you will send the after link, you will type here if it was a success or if it was a failure, or, you know, you will just make it. Or if it was a break even, then you won't say anything. You will just say how many pips or how many profit. You will have a data about the winning rate, because you will see that actually it will tell you that how many wins did you have, how many failures did you have, the success rate, the all trades, the pips in total, the profit in total, the profit in percent, etc., etc. You will have data about the success rate. You will have data about the profit, and you will see that how successful are these flips are. And if you will see, like, from the all trades, the success rate will be 20%. You will be able to backtest all of this trade. There will be the link. You'll be able to open that link, and you will be able to see if that trade was good or not. And if it was a losing trade, you'll be able to look behind the failure of the trade, and you'll be able to find the failure of that trade. And for example, if you find the common mistakes, so for example, like from 100 trades, 80 are losing, and from those 80 losing trades, 70 are because of liquidity. You will know that you will have to pay more attention to liquidity. You will backtest the trades without liquidity or with liquidity now. You will have new statistics. You will have new data in this Excel file, right? Just because you gather the information that you're struggling with liquidity, you are not taking care of liquidity. And right now, when you gather the data that you're not taking care of liquidity, you will create a new Excel file around liquidity. You will create a new Excel file around liquidity. You will gain data. You will gather data once again. You will be able to make new statistics. And for example, if your success rates shows 50, 60, 70, or even 40% win rate, you know that you actually improve yourself. you're improving your trading plan, because from those 100 trades, the last time 20 were winning. And now that I just refined my trading plan, I just gathered more data, I just paid more attention on liquidity. Now 40% or 50% are winning. So I just doubled my win rate. And the only thing you can do this, the only way you can do this is backtesting and journaling your files with this Excel, or just create a Notion for yourself. I'm not using Notion. I don't know how Notion works, so don't ask me to create a Notion file, please. So yeah, the only way that you can gather data is by backtesting and journaling. Backtesting isn't enough. You have to create statistics, because if you have statistics, you will know that what's your actual bet point, where you have to improve. If you're struggling with liquidity, once again, you will pay more attention to liquidity. You will gather data about the liquidity. And this is how you can improve. This is how you can improve your trading plan. And yeah, after you're done with the flips, now you will focus on change of characters. And yeah, flips might take 2 or 3 months. Mastering the flips might take 2 or 3 months to gather all of the data, to refine all of the flip trades, and to actually reach 50 or 60% win rate only on the flips. Now, when you're done with the flips and you have 50 or 60% on the flips, now you can start with the change of character, and just with the change of character, and you will do the same right here. After you're done with the change of characters, and now you have 50% on the change of characters, 50% win rate. Now you can start with the concatenation. You can start with the concatenation. You can do everything, every single material and part of this plan like this. So for example, like the counter trend trades, you can test the counter trend trades too. You can test the pro trend trades. You can test the concatenations. You can test just liquidity, anything with this one. But you have to gather data. You have to gather more information about your plan, because you can have a plan, but if you don't have statistics about the plan, that plan will be worthless. A plan is only working because you can refine that plan based on your failures. And if you don't refine your plan based on your failures, that plan will be shit, because you will keep executing the same repetitive shit. And that will be just a huge shit pillar. But if you refine the plan and you actually find the mistakes behind your trades, find the mistakes behind your bad win rate, you'll be able to make the shit pillar less bigger, right? So just please gather data, just backtest, just keep backtesting, keep journaling, because this is the only way you can be successful in this market. And yeah, we will create a video. Once again, we will create a webinar around how to build a proper trading plan. And we will create everything that's needed for you to be successful. We'd like to give you everything that's needed for you to be successful. So please just keep watching these webinars, and yeah, keep backtesting, start backtesting if you haven't backtested already, and keep gathering data, keep journaling your mistakes, keep journaling your trades. That's all, guys. Okay. Back to the Firefox. Perfect. Closing this one, and we will have to start the top-down analysis soon, in 5 minutes. So we have time for one more question. Okay. How long backtesting is a good backtesting session? Basically, if you have time for 10 minutes of backtesting, then just backtest for 10 minutes. If you have time for 3 hours of backtesting, then backtest for 3 hours. In 3 hours, you'll be able to find, for example, 10 to 20 trades. And you'll be able to gather data about 10 to 20 trades. And you'll be able to journal those trades into your Excel file, into your Notion file, into your handbook, anything. But if you backtest for 10 minutes, you'll be able to find 1 or 2 setups, right? And you will be able to gain and gather data about 1 or 2 setups. So it doesn't matter for how long are you backtesting. It's just a matter of backtesting. If you have 10 minutes for backtesting, backtest for 10 minutes. If you have 10 hours for backtesting, just backtest for 10 hours. It's about how much data can you gather about your trading plan, not how long are you backtesting. Make sense? 1 hour a day is perfectly fine. If you're backtesting for 1 hour a day, I will tell you, you will be successful in 2 months. If you're backtesting for only 1 hour a day, you'll be successful in 2 or 3 months. Literally 1 hour a day is perfect. Backtesting for 1 hour a day is the best thing you can do for yourself. I'm new. My biggest problem is how to backtest. I don't know where to start from. A backtest session for newbies. There are lots of backtesting webinars in the Telegram channel. So please just start watching the backtesting webinars, and you'll be able to know how we actually backtest. Because in those backtesting sessions, on those backtesting webinars, I'm just showing you how I backtest, right? So please just keep watching those backtesting sessions. 1 hour backtesting a day is way more than 90% of the traders do. Exactly. If you're backtesting for 1 hour a day, you'll be fucking legendary in trading. But you don't have to backtest for 1 hour a day. Just set yourself a goal before every single day that today I don't have that much of time. For example, I have only 20 minutes for backtesting, but write down in your journal that I will backtest for 20 minutes. And you won't stand up from front of your monitor until you backtest it for 20 minutes a day on that day. Next day, you will write that, okay, I have 1 free hour on this day, and you won't go to sleep and you won't lay down until you're backtested for 1 hour. Just be disciplined. Okay, just be transparent with yourself, not with others. It's a you versus you game. Once again, it's only where you versus you. Just be true with yourself and do your backtesting every single day, even if it's 5 minutes, even if it's 10 minutes, even if it's 1 hour. Just do your backtesting. If you have only 10 minutes to backtest one trade from one session, that's already fine. You already backtested, you already gathered data, you already journaled your data. Okay, just keep backtesting and do it, guys. Where can I find this Excel file? In the resources channel. Can we have the template, please? It's in the resources channel, guys. It's already in front of you. You haven't even took a look of the Discord, right? You have to go through the Discord. You can't just hop on the USD chat and send your trades into the USD chat without taking a look around in the Discord. How many data do we need to be able to tell that our plan is valid working? I mean, backtesting 5 years of data, for example, with Forex, every single New York session or something like that, or a few hundred trades, just like you said. 5 years of data is fucking much. That is too much, because in this 5 years, so for example, here's the first year, here's the 5th year. The market has changed a lot in these 5 years. So for example, in the first 2 years, this is the first year, this is the second year. In the first 2 years, your gathered data was working. For example, you were testing the extreme zones. In the first 2 years, it was working pretty fine. But from the 3rd year, it just stopped working because the market behavior has changed. So you can't actually gather 5 years of data, because in 5 years, everything has changed. I will say to backtest every single New York session from the past year, and that will be enough. But 5 years is too much. Everything has changed since 5 years. I can't backtest on TradingView because lack of data, even if I get premium plan. How do I backtest? For me, TradingView is perfectly fine because I'm backtesting every day. And since I'm trading, I was backtesting almost every single day, and I backtested every single day. So yeah, for me, it's enough. How do I backtest on 1 minute? TradingView just allowed me to go 5 weeks back. Yeah, that's why you have to backtest every single day. You don't even have to go back more. Exactly. If you backtest the past week on every week, yeah, exactly. For example, what day is it? It's Wednesday, right? Yeah, it's Wednesday. If you backtest this week on Saturday or on Sunday or on next week, you've already gathered more data than 90% of the traders. Just backtest every week, week by week. Always backtest the less recent week or the less recent 2 weeks, and you will gain loads of data. Okay, guys. I think it's time to create the tab analysis. Just a quick question. No, it's too big. Okay. Yes. No. Should I host more of these? Should we take care more of these psychological sessions and questions and answers and etc., etc., etc.? Is it good? Is it helpful? So the real question is, okay, please just remove your drawings. So the real question is, should I host a complete individual session for psychology. So not just in Wednesday session. So just a complete psychological session for 1 or 2 hours where we talk about every single psychological session, just like this one. But right now we didn't have time. There are lots of questions left, but we don't have time to actually take care of those questions. So just hosting a psychological session will be helpful. Yeah. Okay, guys. So I will host one, and as it was promised, we will create that actual trading plan builder file, not just file, a PDF, a video, a webinar. We will show you how to create a proper trading plan, because lots of you guys are struggling with that. You don't have a proper trading plan and you are not journaling your trades. And these two things are the most important parts of trading Forex. You have to have a proper trading plan and you have to journal and backtest your trades. If you do these two things, you'll be successful. If you skip these things, you will be unsuccessful. And now we will start the top-down analysis. All right. A session of making a plan plus backtest will be lit. Yeah, exactly. Please tell us more about trading plan. As I said, we will create a whole webinar around this topic. Okay, guys, let me just drink a few sips. Just a minute. I will. So here I am, guys. Let's start the top-down analysis session. We have 20 more minutes for this. And as usual, let's start on the 4-hour chart. Okay. So what can we see on the 4-hour chart? Basically, almost the same as we saw yesterday, right? So almost the same is happening right now that has happened yesterday. So I will break it down from this region. Here was the last recent daily supply zone. We've already talked about this in last recent webinars. Here was a daily supply zone. Price had just reacted on this daily supply zone after tapping into a weekly demand zone down here, right? This was a weekly demand zone that price was just reacting on. And this line is the last piece of the weekly low point. So in 2017, there was a weekly low point, and this red line is the last piece of that low point. So if price breaks below this low point, that will be a weekly break of structure from 2017. Price couldn't break below this low point, as you can see. Instead of breaking below, it has just reacted on this low point and created a bullish order to the upside and tapped into this extreme daily supply zone. I will show you the supply zone. This was the daily supply zone, as you can see. This was a buy to sell candle, as you can see. We've already talked about buy to sell candles in the webinars. So the name of the webinar video is basically buy to sell candle and sell to buy candle. Please just watch that webinar if you don't know what these candles are. So price had just reacted on this candle. After a reaction, it just reversed to the downside once again, after sweeping liquidity, after creating a perfect character changing scenario in the 4-hour chart. So as you can see, here was the supply reaction, character changing movements on everywhere. Here was the strong change of character. After it has built liquidity here, and after sweeping the last piece of liquidity right here at this region, it has tapped an extreme zone, extreme 50-minute zone, and the huge inefficient downside movement has just started. So this is what happened on the last recent weeks, but we are on this week right now. So we'll focus only on this leg. So price has attempted to break below the last recent weekly low point from 2017 for the second time, as you can see, but it couldn't break below that low point. Instead of breaking below that low point, it has just reacted on this demand zone down here, as you can see. It wasn't even a real demand zone. It didn't even create any break of structure here, but it just reacted on the extreme low point. There was an extreme low point reaction, and it has just created liquidity just above the weekly low point. So here's perfect liquidity, as you can see, built up for the upcoming short. Okay, what else can we see? We can see that the huge inefficient movement and flip, basically the flip has happened from this candle up here. This is the extreme of this huge inefficient movement to the downside. But above this candle, we have another supply zone up here, which is too huge to be a supply zone, because as you can see, this supply zone is almost 100 pips. So we are not using 100 pips zones as supply zones. We will refine it, but I believe price won't go up to the supply zone, because if we go up to the supply zone, there's a higher chance that we will break above the supply zone and continue the long movement than just reversing on this zone. Okay, so we will only care about this zone that has caused the flip, that has caused the inefficient movement, and that has caused loads of structural breaks to the downside. Okay, what can we see in this case? We can see that price has created this supply zone. After the reversal here, price has created the change of character, and the change of character has happened from this 4-hour zone down here. And this 4-hour zone, sorry, this 4-hour zone is still being unmitigated. So price did not mitigate this 4-hour zone, as you can see. It was just mitigated the 15-minute zone above this 4-hour zone, which was this span. The 15-minute zone mitigation right here in this place was basically the purpose of this mitigation was the liquidity collection. So price has just reacted on this demand zone, this 15-minute decisional demand zone. The purpose of this reaction and reversal to the upside was to collect more stop losses. So lots of stop losses are sitting on this place. If price will come down to mitigate the 4-hour zone, this stop loss, all of these stop losses will be helpful to actually reverse price when price tells these supplies. Demand zone. So price has built up more liquidity. As you can see, here was an extreme zone. This extreme zone couldn't break below the last recent low point, not even a low point, not even a demand zone. I've explained this in yesterday's recap video. And this reaction up here wasn't strong enough to break below the, this movement down here wasn't strong enough to break below this demand zone, or this low point, meaning this high is weak. It has been explained yesterday that this weak high reaction was a weak high reaction. And the only purpose of this reaction right here is to collect liquidity once again for the supply zone. So we have double-sided liquidity once again, because the purpose of this collection right here, the purpose of this reaction was to collect liquidity for the supply area, and the reaction here was the purpose to collect liquidity for the demand area, right? So we have liquidity for the sell side, liquidity for the buy side. Basically, it's a range between a high and a low point. So the 4-hour chart is a range, because what do we know about ranges? What do we know about actual substructure? The substructure is only a liquidity. Let me just drink, sorry. Substructure is only liquidity, right? For higher or deeper areas. We have a higher area and we have a deeper area too. This is the last recent low point. This is the last recent high point. Everything that happens between the low point and high point will be substructure. Until price can break above the last recent high point with body closure, there won't be a break of structure. And until price can break below the last recent low point with weak closure, that weak is perfectly enough, because this will be a change of character, not a break of structure. So this is the break of structure, this is a change of character. So until price can break below this low point with weak closure, there won't be a break of structure and change of character too. So yeah, everything that happens between this high and low will be substructure. And this is just liquidity building movement for the upper supply area and downer deeper area. So we will see what will happen, which zone will be hit first. But actually, as you can see, after this downside movement, prices reacted on this demand zone. And after a reversal to the upside, price couldn't break over the last recent high point, meaning it was a weak high reaction. And after a weak high reaction, this weak high couldn't even take out the last recent weak low point. So what can we see here? That this is weak, this is weak, this is weak, and currently this is weak. Why is this weak? Because this couldn't take out the last recent demand. Why is this weak? Because it couldn't take out the last recent supply or high point. Why is this weak? Because it couldn't take out not even the last recent strong, but not even the last recent weak point. This is extremely weak. This is just liquidity built up for the upper supply area. So my expectations are that I'm actually expecting that price will react on some sort of supply zone. Or it's not expectation, it's a forecast. So I'm actually forecasting that price will react on some sort of supply zone here. And I'm actually expecting the sweep of the downside liquidity first and the demand touch first. And after a demand touch and after the buy side liquidity sweep, we can tap this demand zone. And after a tap of this demand zone, we'll be able to tap this supply zone and collect all of this supply liquidity from about this region. There will be more liquidity built up for here, somewhere around here. We'll be able to collect the liquidity, and after collecting the liquidity and after tapping into the supply zone, we'll be able to see a reversal on this supply zone, and we can attempt for the third time to break below this last recent low point. This is the first scenario that could happen. Second scenario is if price breaks above some supply zones here, creates a change of character, breaks above the last recent weak high point, which is this one. After a weak high point break, it collects the liquidity, collects a lot of liquidity from the supply area, creates a change of character on the 15-minute chart, and target this demand zone down here. And after this demand tap, we'll be able to see what will happen. If the demand holds, then we'll be able to target higher supply areas, for example, that I just showed you recently, this one. If this demand can't hold, then we'll be able to target the actual weekly low breakout structure point. So these are the 4-hour expectations. These are the 4-hour forecasts, because nothing much is happening on the 4-hour chart. The 4-hour chart basically just a huge range built up for the upper supply area and deeper demand area. This is what can we see on the 4-hour chart. Is it understandable and followable yet? Okay, guys. Thank you. I will switch to the sorry. Just the AC. I will do drawings, clear our drawings. Okay, perfect. So switching to the 50-minute chart. What can we see on the 50-minute chart? Price was somewhere around here yesterday, right? Exactly here was price yesterday, because here was a huge range. What do you know about ranges? That ranges will be swept sooner or later. Downside range has been swept, upside range is still there, right? If you take a look at yesterday's markups, what did I tell you about yesterday's markups? I marked that if price can react on this zone, the last recent 50-minute zone, then we will hit higher supply areas and we will hit the supply zone up here. And as I said, this zone in the markups and in the markup updates, as I said, this zone had a lower chance to hold price because this was part of the higher time frame liquidity, and this was being said in the actual markups yesterday. So as I forecasted, this zone had a higher chance to be broken, but we could still see a reaction on this zone, which has happened. There was a reaction on this zone, as you can see, and after a reaction, the zone has been just flipped, and the flip has happened. Let me just remove the drawing. The flip has happened from this supply zone here, right? Right? Or the flip has happened from this supply zone up here. So these are the two areas that I just started to flip. Actually, price has just reacted on the deeper areas, you can see. And after a deeper area reaction, it seems like it will create a break of structure or change of character here to the downside, but we will talk about that later. Okay, so this was the last recent 50-minute demand zone, extreme demand zone, right? I was targeting this demand zone with my shorts here. That short did hit stop loss, not stop loss, but the trailing stop loss for break even. But my TP did hit perfectly. As you can see, I was targeting this zone, and it would have been a 25 risk reward ratio trade for me. And that's what I meant by actually trusting my analysis. I knew that price was reacting on a high point. It was a high chance to tap this demand zone. And that's why I didn't actually book profits at 1-to-8 risk reward ratio. That's why I kept it running in break even, because I trust in my actual analysis. I have data about this kind of scenario from yesterday's recap video, that I have data that this kind of scenario has 60 or 70% chance to hit my TP and has 40 or 30% chance to hit my trading stop or break even. So yeah, that's why I was that's why I was let my trade run, because I knew that price will hit this demand zone. I knew that there's a 70% chance that price will hit this demand zone, and after a demand, it will be able to take another trade. But price was just ranging yesterday. That was perfectly fine to take a break even yesterday. And after I marked this zone, I just set it on the screen that if price breaks below this zone, then we will have a reaction on this zone. It's there with arrow movements. Why did I say this? Because this is the last piece of the liquidity on the higher time frame that I'm just marking, and this is the last recent zone below the liquidity. And this is basically the extreme of the whole bullish movement. As you can see, that has changed character here to the upside. This was the last recent supply zone here, and this supply has been changed from this demand zone, had liquidity just about perfect higher time frame liquidity. And I was expecting the tap of this demand zone and reaction on this zone. Okay, now that we know what has happened yesterday, we can take care about the forecast. So as you can see, after the week high reaction here, price has just started a fall. It's just falling, right? It just keeps breaking through demand zones over and over again. And after a less recent demand reaction, this demand zone couldn't take out the less recent valuable supply zone, which was this one. Why is it the less recent valuable supply zone? Because this has caused the flip of this extreme zone, right? It's clean. This was the less recent extreme demand zone that has caused this huge option movement to the upside. This demand zone couldn't take out the weak high, meaning this demand zone has a high chance to be broken. This has happened. Price has levitated back down to this demand zone after reacting to a weak high. And after tapping into this demand zone, price has just flipped this zone and created liquidity for this zone. So here was perfect liquidity for this zone, as you can see. This zone has flipped the overall demand zone, liquidity built up for this zone, sweep of the liquidity, and immediate reversal after liquidity sweeping movement. And price couldn't break above this zone, as you can see with body closure. So we can consider this a break of structure or anything like this. This was a clear reaction on liquidity sweeping movement. So price is on the way down to create a change of character. Sorry, guys. And since this is a 50-minute zone, 1 minute change of character is perfectly enough for us, right? So we don't have to wait for the 50-minute change of character here. 1 minute change of character is perfectly enough for us to actually execute short trades to the downside. Okay, so the 50-minute perspective. The 50-minute perspective looks like this, but we have to zoom out a bit because this is just a small piece of the 50-minute perspective. What else can we see? What do we know about the 4-hour structure? What have we actually explained about the 4-hour structure? The price is a chance to sweep the upside liquidity and sweep the downside liquidity at the same time, because the upside liquidity is there for the supply zone, downside liquidity is there for the demand zone, right? That's all we know about the higher time frame. How can we build this knowledge, and how can we actually assemble this knowledge with the lower time frame 50-minute chart? By just simply following the 50-minute zones. If you follow the 50-minute zones and if you follow the 50-minute order flow, we will know that which liquidity will be taken out first and which will be there for deeper demand areas such as supply areas. So right now it seems like the price has reacted on a demand zone, right? So this was the last recent valuable demand zone. But after this demand reaction, this demand couldn't even take out the supply zone, meaning this is a weak low. After this, the price couldn't take out the weak high point, it couldn't take out the weak low point. But after reacting on a weak low point and sweeping this much of liquidity, it just reacted on a supply zone. So right now, supply has a higher chance to be in control and take out more liquidity from the downside than just reversing to the upside and taking out the upside liquidity. So more likely this upside liquidity is being built up after a demand reaction will happen. And the 4-hour demand is somewhere around here. This is part of the 4-hour demand. So the 4-hour demand is somewhere around here in this region. So right now, short continuations have higher chance to be happened actually, and the 4-hour demand has a higher chance to be tapped. And after this 4-hour demand and after the confirmation, we can aim for the supply zone. But this is just a higher 50-minute perspective. We need a lower 50-minute perspective too, and we will gain that 50-minute perspective if we zoom in. Can we see another demand zone below this demand zone that price could possibly react on? Right here, there's literally no valuable demand zone for us. Maybe there will be a 1-minute demand zone that we can target, and from this low high point to this demand zone there will be like 50 risk reward ratio or 30 risk reward ratio, so we'll have plenty of room to target this demand zone. But I will count on the break of this low point, just because I explained that this is liquidity for the 4-hour zone, just because I explained that this touch of the demand zone on the 15-minute chart of this 15-minute demand zone was only a purpose of the liquidity collection for the deeper demand area, right? So I'm really expecting the continuation to the downside and really expecting the tap of this deeper demand area. And after a demand area tap, we can continue the overall bullish movement to this supply zone. And after the supply zone tap, we can continue the overall bearish movement to the weekly break of structure. This is how you can actually assemble the timeframes together. This is how you can actually build a 4-hour plan and use the 15-minute chart to follow that 4-hour plan. And this is how you will be able to actually build a 1-minute plan to follow the 15-minute plan. And we will build a lower time frame plan too. So the 15-minute right now, it looks like that this demand tap, this weak demand, this is a weak demand. Once again, I'm telling you that this is a weak demand. This weak demand tap couldn't even take out the less recent valuable supply zone. And if this weak demand can't even take out the less recent valuable supply zone, more likely this low point will be weak too. So I'm expecting on the break of this supply. But the 15-minute supply that you marked haven't, I see there is, I don't care. There's liquidity for this zone. There's liquidity for this zone. And more likely on the 5-minute chart, this will be a perfect flip zone. But right now, it seems like the price has built up liquidity or just swept this liquidity. But I'm not expecting the tap of this supply zone. I'm really not expecting the top of the supply zone, because this zone is the literal flip zone that has flipped this demand zone and had liquidity just below it. And even price swept the upside liquidity here from this tap, and this tap, this candle swept that liquidity from above the supply zone too. So I'm really not expecting the top of this supply. If price breaks above the supply zone, then I'm really expecting that price will continue the bullish movement, because this supply zone is part of the liquidity here. So if price breaks above this supply zone, then we will see higher supply area taps. For example, like this. This supply zone is unvaluable for us. Okay. So switch to the 5-minute time frame. Here on the 15-minute, we can actually see liquidity building up for the shorts. As you can see, this is liquidity. So we'll be able to target these demand zone down here. We will have an extreme demand zone there, or this demand zone down here. We have 2 target points for the shorts. Switching to the 5-minute time frame, what can we see? The price is reacting on the 5-minute extreme, right? Here was the 5-minute extreme of the flip. Here was the reaction on that zone, as you can see. Here was a reaction, and from this zone, prices flip this zone, flip this zone with perfect movement. And there's the liquidity line. First touch, second touch, third, fourth, fifth, sixth, 6 equal taps that has been swept with this movement to the upside. Okay, so where's the last piece of demand? I'm asking you. I will mute myself because I will drink a sip. Please just mark the last recent demand zone, valuable demand zone. Shani, thank you for raising your hand. Just show it, please, Shani. Where's the last recent demand zone? Exactly, that's the last recent demand zone we care about. Why? Because the liquidity sweeping movement and the flip zone has happened from this demand zone. So as you can see, here was a bullish order flow coming to the upside. Last recent valuable demand zone. Basically, there was a small change of the demand zone or just a reaction on the demand zone. After this price is reacting on this supply zone here. Here was a flip of that supply zone. Supply, flip of that supply, flip. Here comes the flip. Here comes the liquidity sweep also from this area. Let me just remove this. That's from here. So here was a liquidity sweeping movement. Basically, this was the last recent valuable demand zone for us that we care about. This is the last recent 5-minute demand zone. And now this opens new perspectives for us, right? What are the new perspectives? That if price can react on this demand zone and create a change of character on this demand zone, then we can aim for higher time frame supply. For example, like this one, but this is part of the liquidity, as I said. So we will be able to aim for the higher supply, the 15-minute supplies on up here. This scenario will be leave. If price reacts on this demand zone and creates a change of character, then we'll be able to target higher supply area. This is how we are assembling the 15-minute perspective with the 5-minute perspective, right? Because we have the 15-minute perspective that if price reacts on this supply zone and creates a change of character, then we'll be able to jump in a short trade. But price is reacting on the demand zone, and this demand reaction gives us new perspectives. As I said, if it can create a change of character, then we'll be able to target the higher time frame supply zone, or just an identical target, the extreme of this character changing movement here. Because if price can react on this extreme zone, then we'll be able to take a short down, or if price can break above this supply zone, then we'll be able to target the higher time frame supply. So basically, if price can create a change of character right here, I will be rather targeting this supply zone than just the supply above, because this supply has still a chance to give a reaction for shorts. So this is how it looks like. This is how it looks like. Why isn't the change of character to the downside? What do you mean? It's reacting on it. It could have been just a liquidity sweep. Price didn't break below this demand zone. It was holding. And as you can see, there's a reaction. We can't consider this as a change of character. So I'm actually expecting the break of this demand zone rather than the hold of this demand zone, because there's huge liquidity line below it. And as you can see, as I talked about this, there's this perfect demand zone, the extreme of the movement, that has started the overall movement to the upside. And we have liquidity below this demand zone, above this demand zone. We have a supply reaction. We have a change of character here. On the 1-minute chart, more likely there will be a change of character somewhere around here. The price has change character here. So basically, this demand zone could be our target point if price can break below this less recent 5-minute demand zone. This will be the best scenario for us. If price can break below this demand zone, we'll be able to take a short continuation down to this deeper demand area. If price can break above this supply zone, then we'll be able to take a continuation to this supply area. And if price can react on this supply zone, it can create a change of character on this supply zone. Then we'll be able to take a continuation down to this demand area once again. This is how it looks like. We have several scenarios that we can expect on this session, and all we have to do is follow these scenarios. Taking long trades in this region, taking long trades after this supply zone will be riskier than usual, so I wouldn't take these kind of setups. I wouldn't really take this setup after this supply zone. I wouldn't really take any longs after this supply. I would just rather wait for the break of this 5-minute zone, or I would rather wait for the confirmation or break of this zone. This is what I meant in the in the webinar in Wednesdays when we were 3 weeks ago, when I said I'm mainly trading on 5-minute zones. This is what I meant, because if a 5-minute zone breaks, that will be an indicator that price will show the actual movement after the break out the demand zone or supply zone to the direction where the zone was broken. So these are the plans. If this supply holds and creates a change of character, we will target this zone. If this supply breaks, we will target upper supply area. If this supply won't be touched and price just breaks below this demand zone, I will target this demand area once again. These are the three possible scenarios for me in this session that I'm expecting. But there could be one more scenario is if price weeks above this kind of liquidity, because this could still be a liquidity for this liquidity line. It can be a liquidity sweep, or it could be a liquidity sweep and could be just one more type of the liquidity. So if price weeks above this high and just wicks above and not closes above, then it will be just a liquidity sweep. And after this, we can counter a counteration to the downside, as we learned this also. Okay, so this is the 5-minute perspective. Let's take a look at the 1-minute perspective. Do you still remember for the 5-minute perspective and the 15-minute? I'm asking you. Please just answer in the microphone.
Yeah.
You remember, remember for the 5-minute, 15-minute perspective, right? Now all you have to do is to assemble these perspectives and only use the 1-minute chart for entries, for confirmations. Because you have the 5-minute perspective, you have the 15-minute perspective. You don't need a 1-minute perspective, because 1 minute is the confirmation time frame. We are entering on the 1-minute chart, we are confirming our entries on the 1-minute chart, and we are confirming the main direction of the 5-minute and the 15-minute chart on the 1-minute chart. So we don't have to build a perspective basically here that price will come down here, create a change of character, or come up here, create a change of character, blah, 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 blah. We don't have to care about this. We have a 5-minute perspective that tells us that there's a supply zone up here on the 5-minute chart. There's a demand zone on the 5-minute chart. There's a liquidity on the 5-minute chart. And if this zone holds, then we'll be able to jump in a short trade. If this zone breaks, then we'll be able to jump in a long trade. If this liquidity will be swept, then we'll be able to jump in a short trade. If this zone breaks, then we'll be able to jump in a short trade and target this demand zone. We have the whole higher time frame perspective that we care about. Now, if we zoom in on the 1-minute chart, all we see is a mess, right? We can identify lots of supply zones. I can just draw this supply zone. I can just draw this supply zone. I can just draw this supply zone. I can draw every single supply zone on my chart. So my chart, if I only care about the 1-minute chart, will look like this. It will look like this. This is the 1-minute chart, how it looks like, because every single one of these zones are basically supply zones. Do I want my chart to look like this? No, I don't. I only want to care about the 5-minute and 15-minute perspective. And basically, the less recent variable zone here is only this one right here, because it has caused the flip, as you can see, or even this one. Here was a demand reaction. So the flip of the demand has happened from this week up here. So basically, here was a supply reaction on that week. So how can we combine this knowledge, this 1-minute knowledge, with the higher time frame? That if this week can give us a reaction and break below the less recent demand zone, then we still have the 5-minute perspective. If this week will be broken, and if price will break above this, I won't take a long opportunity after the supply zone, because I know that if this week breaks, then price will come after the supply zone, and I will be able to execute high probability setup right here, and I won't force myself into this low probability setup when I have a high probability scenario up here. Actually, 3 high probability scenarios built up for this supply zone. So if this happens, if price reacts on this supply zone, breaks below this demand zone, I will be entering in a trade. If this demand supply breaks, and only if price creates a really, really fucking good criteria for this flip of this demand, supply zone, the color was confusing me. So if price creates a really, really fucking good scenario and criteria for this supply zone with, I don't know, 5 bottoms of liquidity and continuation, etc., then I'll be entering in a trade based on this flip of the zone. But mainly I'm waiting for the top of this supply zone here and waiting for the top of break of this demand zone. That's all I'm waiting for in this session. And there will be a chance that price will react on this demand zone that is caused a liquidity sweep. And if this demand zone breaks, flips, then we'll be able to take a continuation. That's all. This is how you can build a perspective. This is how you can combine all of the time frames together. Understandable? Wait a minute. Yes? No? Wait a minute. Sorry, I just turned the AC off because I'm cold because the AC is on 24/7. So yeah, okay. Why are we not entering in the 1 minute change of character demand? Because I just told you the perspective. I just told you how the structure looks like. If you want to become part of the liquidity, just enter on the demand zone. But I don't really recommend you to enter on this demand zone because I told you the perspective. You have no room between this demand zone and this supply zone to actually execute a good trade. You will have like 5 risk reward ratio between this supply and this demand to enter. We are not aiming for these kind of scenarios. We are aiming for high probability scenarios. This demand zone is heavily part of the liquidity. This is part of this huge fucking liquidity line. If it breaks, then we'll be able to enter in a short trade. If this supply holds, then we'll be able to enter in a short trade. If this supply breaks, then we'll be able to enter in a long trade. If this supply will be swapped with weak, then we'll be able to enter in a short trade. This is a low probability setup. We don't care about this kind of setup. This is just a liquidity here. Also, as you can see, this isn't a change of character right here. It's just a liquidity sweep. This is a bad setup. We care about only the high probability setups. And I just drew you what are the high probability scenarios for this session. 1 minute is noise. Exactly. If you would enter on every single 1 minute change of character, you'll be, sorry for the word, but you'll be fucked. Just take a look at how many change of characters are there on the 1 minute chart. You will see that, okay, here's the demand zone. Okay, price split this demand zone from this supply zone. Okay, I will enter on this one. No, you are going against the higher time frame perspective, -1 loss. Here's, okay, here's a nice flip. Okay, this supply flip the demand zone, enter. Okay, -1 loss. Here's a break of structure, or here's a break of structure. Okay, I will enter on this demand zone because there's a break of structure. I don't care about the higher time frame perspective. There's a loss. There's a loss. There's a loss. Everywhere is a loss if you only care about the 1 minute perspective. If you build a higher time frame, 5 minute and 15 minute perspective, everything will be much cleaner. Okay, guys, I'm actually still here. The session has started, what's the time? 10 minutes ago. But we can just keep going a little bit for like 5 more minutes because, yeah, I'm in the mood. Yeah, I have to eat too. No live trading session. No. No, guys, actually, I'm fed up with the live trading sessions. You know, I don't know how, when did I host the last live trading session? Maybe in January or February, I don't even know. But I'm not into these live trading sessions because in the last live trading session, I just gave you a good trade that went up to like 1 to 10 risk reward ratio. And I'm not into these signals. You know, I don't like to give signals. I don't like to show you my entry points because if I'm showing you my entry points, you're just entering in the trade brainlessly without having a plan. You're entering because only just because I'm entering there. That's the only reason that you're entering after I'm showing you a trade. But you have to build your own perspective because your perspective could be much different than my perspective. And yeah, I'm not into these live trading sessions. Yeah, after last time when I just gave you that 1 to 10 risk reward ratio, not signal but trade. Oh my Jesus, I just received like 50 DMs that, hey Flip, give me more signal, I can't pass my challenge. Hey Flip, give me more signal, give me more live session, please. No, I'm not into this. Okay, I will just start the recording because it will be huge fucking long.